This is News You Can Use.
The last few years have been unprecedented. Arguably the single word that best describes 2020, 2021, and so far 2022. Unprecedented. First, we shut down the economy. And employment, a key driver in housing, goes from 3.5% in January of 2020 to 14.5% in May of 2020, the highest number we've had since the Great Depression. We lost 20 million jobs in the blink of an eye. For the first time ever, we were all told to stay in our homes. So naturally, housing sales went down. No, they went up, way up, unprecedented. With the Federal Reserve driving rates down because of job losses and fears of an economic meltdown, 30-year fixed-rate mortgages went to an all-time low of 2.75% to 3.25%. Unprecedented. With interest rates at the lowest level in years, people stopped commuting to work, and most jobs went virtual. More people working at home than ever before. Unprecedented. The conditions, low rates, and working at home drove the demand for housing higher. It was as if people replaced the time they would normally have spent commuting with property searches on Zillow and Realtor.com, etc. As a result, housing inventories went to an all-time low, and housing prices grew at an all-time record pace. Buyers lined up, literally. Buyers bid up prices, literally past prices that properties were listed at for the first time in history, at least in our markets. No financial contingencies, no appraisal contingencies, waived inspections, escalators, anything for buyers to win the deal and secure their coveted home. And then, well, the Friday night party recently turned into the Saturday morning hangover. Inflation increased to an unprecedented number in our generation, 9.1% in 2022. We haven't seen these numbers, well, since 1981. Maybe not unprecedented, but certainly painful, as the cost of everything from a gallon of gas to a loaf of bread went through the roof. In response, the Federal Reserve, well, they didn't reduce interest rates, they increased rates at an unprecedented pace in 2022. Mortgage rates followed suit and increased from 3.5% historic lows to 6% from March to May at an unprecedented pace, the fastest rate increase on mortgages in history. So, where are we now? A little bit exhausted. Unemployment is back, however, to 3.5%. Really good news for housing. Rates are not 6% anymore where they peaked in May, more like 5.25% to 5.5%. And inventories were at an all-time low. They're now growing. And wait, some sellers are actually lowering prices. What's next? No one knows for sure, but we have some great resources to help give us clues. One of which is Doug Duncan, the chief economist for Fannie Mae, a friend of Supreme Lending for a very long period of time, and a regular guest on this program. Every time I spend with Doug, I end with one final question. Doug, is it a good time to buy or sell a home? His response is always the same. First, do you have a household budget? The answer is yes. Second, can you afford the home in today's dollars? If so, you can afford it, you have a budget, then yes, it's a good time to buy or sell a home. If you put your home buying or selling journey on pause because of, well, recent happenings, I get it. Things have been unprecedented, confusing, and a bit erratic. But I have good news for you. Today, that just might spur you back into the market. Rates are good. Not great, not at the lowest ever, but they're good. They're way below the 50-year average for 30-year fixed-rate mortgages at 5.25% to 5.5%. And inventories are not the best they've ever been, but they're better than they were. And sellers are adjusting their expectations that the home selling price should be more closely aligned with the property's current value. Employment is great. We're once again back to historic lows. Furthermore, people want to live in our markets. They prefer to live in a home that they actually own. People are moving here at an unprecedented pace. In short, unprecedented, the word for the last couple of years in America and certainly in housing, may soon be replaced with a word that we would all prefer: normal. And that's news you can use.